Hey, what's up, guys? In this video, we're going to talk about liquidity. And this is part of the series of just the free course that I'm uploading on YouTube. And first of all, what is liquidity grab or what is liquidity? Liquidity is a phase or is a level where sellers and where there's sellers and where there's buyers. And what are the sellers? Sellers are the people who are pushing markets to go down. Then buyers are the people who wants to buy, who wants to push the market to go up. And every single time they connect, they meet, there's always a battle, there's always a clash. And it's just like two elephants. When two elephants have a clash, they feed in that place, there's always going to be a destruction for these things. So you want to see yourself, you want to see the sellers as an elephant and the buyers as an elephant. When they fight, there's always going to be, it's not going to be easy. It's not going to be easy. So we're going to dive into this video today. I'm going to talk about how to identify it, how to avoid them, and how to use them to your own advantage as a professional trader. So without being said, let's jump into the chart and I'm gonna use BTC as an example because again, um, let's use BTC as an example. Okay, so good. Um, I don't know. So how come it's not showing now? Uh, I don't know if it's showing or it's not showing. I don't know. I'm trying to just. Why is it not showing? Okay, I think it's good now. Okay, I think we're good now, right? Okay. Ooh. Yeah, okay, good. I think we're good now. So now, um, I draw this zone. Let's start again. Let's start again from 4 hours time frame. So it's easy. Like again, if you really want to draw your area of interest, you have to start from 4 hours time frame. You have to start from not just 4 hours time frame. You have to start from 4 hours time as a day trader. Then you go all the way to 1 hour. Then your entry we can start from your entry. You can start looking for your entry with 15 and 5 minutes time frame. So in this aspect, I'm gonna draw this. We have this area of interest. Why? Because multiple time we have this as a high, then we have this as a high, then the market give us a low, then it break above it, then give us a low, a higher low, then it break all the way up, then give us a new low, a new higher low, then the market give us a new higher high, right? Then after the new higher high, then we were expecting for it to create a new higher low in this area, but it didn't happen. Then it break below, then a break below. Then now we have the market in this area. We have the market in this area retesting, having to create a new lower high. This happens to be a new swing high, a new lower high because we have a new lower low here. So now I should have marked this area up too. I should mark this area up. I should mark this area up. smooth this area up. Then we have yeah, let me just delete this one. so now so now this is our area of interest, right? And we have a second area of interest in this area, and we have another area of interest, area of interest here. So now let's move to 1 hour time frame. I mean, you can find it in any recent video. You don't have to move all the way like I'm doing now. You, you don't have to move all the way. But I'm just trying to give a clear example. So, as a matter of fact, let's use the new ones. I don't want to use these old ones. I don't want to use the old ones. Okay, good. So first of all, this area has been marked out as area of interest, right? Then I'm going to also mark this as area of interest. Yeah. So this happens to be, why do I mark this area? The markets, we have the all-time high, the swing high. Then we have the markets has been creating a new low and new high. So I'll use this one as a low, and this one happens to be, you know, uh, a new lower high, a new lower high. Then we have a push to create a new lower low. Then we have a new lower high. Then now we have a new lower low. Then we now have a new lower high. Then before the markets push all the way down. So I'm also going to use this area of, this is also an area of interest. So again, now you can see on 1 hour time frame. Why? Because again, look at the trend that we'll be having. The market have been retesting this area, creating a new creating higher high and higher low. We have higher high, higher low, higher high, higher low. We have higher high. Then instead of this to continue, it's like, for me, maybe I will not probably enter any trade in this area, because again, this can still be valid as a new lower, because it has yet to break the previous lower low, higher low, which is this, until the market break this point, which it already did here. This invalidate the trade, so which is why I will probably be entering trade in this area. So this one is invalid. I'll probably not enter trade here for a longer time, but for a shorter time, maybe you can, if you find good entry. And so with that being said, this is our focus. Then we have the market going on an uptrend, now got broken. Then this is the retest of it, so it means that the market is creating a new trend. This happens to be a new low. We have one the swing high, the low, and the low, and the low. You can see how the way it's been lining up. Then again, the market is also creating a new lower low, lower low, and again, so which is respecting all these things. So moving on, I hope you guys understand what I'm trying to, the picture I'm trying to paint in this area. So now, if I move to 15-minute time frame, let's say 15-minute time frame. It's loading, I guess. Okay. So now coming to this. So we can see that even though, remember when I was telling you there, even though when the market is retesting a particular zone, it's retesting a particular key zone, you don't get to enter trade immediately. Why? Because again, we still have buyers still pushing the market here. We have buyers still pushing the market. Look at it. It's creating a new. It's creating. This is a low. We have a new higher high, higher low, higher high, higher low, higher high, and it's still creating until the market starts, shifting the momentum from buying momentum to sellers momentum. This is when you start like thinking about selling. You don't want to enter trade because imagine you enter trade when you get here at this particular place and your stop loss is somewhere around there. It will have taken you out. So for you, you don't want to enter trade. You don't want to do the same thing that that will get you kicked out. And the other things you want to look out for, you want to enter your trade during the session that actually has volume. If you look at it, you see that this yellow, more like yellow or red, is actually during the New York session. So every big move that you're seeing is happening during New York session. So this again, you have to put into consideration that when you want to enter trade, you don't want to enter trade during the session that the market. Like imagine it will frustrate your life. Imagine you enter trade in this area, it will frustrate your life. You can never make it. So there are many things when it comes to liquidity. Like there are many things you have to look out for. So this is what this thing that happened here. This thing that happened here is called liquidity grab because a lot of sellers are here. A lot of sellers are here. Let me just. A lot of sellers are here. See, a lot of sellers are here. A lot of sellers are here. That's why you see every single time the market reach to this point, it keeps selling. Like you never go above it. Anything that is make the market go above it means that the selling pressure is off and buyers are taking over. So your job is to have patience for the market to start giving you. So let me give you this scenario. Okay, let me give you this scenario. Let me give you this scenario. We have we have okay we have uptrend, right. I'm not saying this is how it's going to look like, but I'm just drawing uptrend and downtrend to see, to just paint something for you guys. Okay, so now we have this uptrend and downtrend. So area of interest is just basically this point here. It's just basically this point. Just basically this point. This point. Just basically this point. Just basically this point. Just basically this point. Sorry, this area of interest, right? Then liquidity now. What is liquidity? Because liquidity now, area of interest, we both know that anytime the market gets to this level, there will be a reaction, right? Then liquidity now is the thing that happens sometimes. It drags the market downward. The reaction goes down beyond like the level that you thought it was gonna reach, right? Then sometimes it can even come to this point. Then something like this, it can come to this point. Then it can come to this point, this area of interest, just to take money from people who are buying and selling. like impulsive buys and sells, then it will now start going where it's supposed to go. So your job is to be able to identify this area. And how do you identify it? Is by the chart patterns that I do tell you about. And again, you also have to wait for the right trading section, which is for me, I use London and London. But if I'm trading BTC and a US 30, I use London and I use New York session because that time there is no much there's that is when volume comes to the market because of the New York market. Then what I want to actually tell you is that in this point now, when the market is testing this particular key zone or this level, the market will probably be doing like this, right? The market will probably be doing like this, probably doing like this. Okay, let me pause first. Remember when I told you that just because the market is retesting a particular key zone or area of interest doesn't mean you have to enter buy immediately, because again you can get taken out before the market will continue to move. Exactly the same thing I'm telling you here. You do not need to enter immediately, you just have to have patience. Patient, like let me tell you what, if you even though you miss this one, another one is coming. Patient. You have to act in abundance. So the point now is that you have to wait. Let the market just start telling you it wants to. So if the market wants to continue going up, it will be now creating. It will now be consolidating in this area. It will be consolidating in this area. Then it will be shifting the momentum from the sellers. Sellers will be exhausting. Buyers will be taking over slowly. Then you now start seeing, all this thing. Then it will not go this way. You see the way I'm doing it now. All you have to do is just have patience for the market to start shifting from this bearish movement to bullish. Then you can now enter your trade. Now we're gonna go to the entry zone. You enter your trade and you put your stop loss where you're supposed to put it. Then you avoid the liquidity grab, or you just have to enter after the liquidity. Then how do you do that? This is how you do it. So same thing as selling. When you are selling, now we have this market push down, then again you're waiting for a reaction to happen in this area. So again, this market is going this way, it's going this way, it's going this way, it's going this way. You're just doing the things, right? Then when it get to this, when closing to the area, to the level where the key zone is, the market will start shifting from that bullish momentum to bearish. Then now you can start looking for sell. You can start looking for sell. Then this. I hope you understand what I'm saying. What I'm saying is that just because it's retesting a particular key zone doesn't mean you have to enter immediately. You also have to wait. Is the market session right? Is the time frame right? Are you in a good position? Remember from the previous video when I was talking about your area of interest, there are many things that are involved in terms of, is everything aligning? It's not just that this. This can be happening, it can be happening in Tokyo session. You have to know, is this something you want to risk or you want to do? Do you understand me? But I would prefer you enter trade during London and Tokyo session. Then if you're in Nigeria, London session start from around 7 a.m. Between 7 and 8 a.m. depending on the time. Then if you're in Nigeria, you want to trade Tokyo session, sorry, New York session. New York session starts from I think 2. No, it start by 1 p.m. our time. 1 p.m. our time. Then until like I think about 9, 10, 11 our time, thereabout. 11 our time. And yeah, because between us and UK's, I think sometimes it can be 1 hour, sometimes it can be the same time frame. So it's when we open our market here and they open their market. Like London and Europe is also the same thing. So there's not much different. So you want to be looking for entry or your trade during this New York session, because this period is when market moves the most. So you want to be able to focus on this aspect. And that is same thing I use here. Same strategy I use here. This strategy. Look at what happened. The market was creating higher and higher low. Then all I have to look for the market to shift. And how did it shift? Look at it. Look at it. Let me draw this in here. There's this right here. And we have this. Look at what happened. It started creating a new lower high and lower low. They say this is where I'll probably be entering my trade, or rather, you can either enter your trade here or wait and enter your trade in this area. One of the two. You can enter a trade from here, then look at what happened. Even when the market reversed and get to the point, it didn't pass it. It just, So my point is, you just have to have patience. Patience is all you need. You need patience and patience and patience. Nothing more. You need patience. So if I'm going to do another one, then if I'm going to go and do another one we have the market in this area. Okay. Okay, same thing. Same thing, right? We have the market just creating higher high, higher hello, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now what happened here? The market start consolidating this area. So it's not giving us, it's still giving us higher high, but it's not giving us a new higher high that is higher than this. So the market start consolidating this area. Look at during these sections. These sessions there was no movement in this section. But look at what happened during London session. There was a movement in London session. There was also movement in New York session. But again, I will still not enter trader because there's no valid entry. So after this, see, after this, I'm just gonna like this. Then we have a break below it. Then what happened next? We have a retest. At the retest of it, so it means that this retest is giving me validation that okay, this trend, this buy trend is not valid anymore. So now sellers are taking over. So my job is just to enter during the proper section, then capitalize on it. So it's basically the way it is. It's not really, there's no rocket science in it. Then another area of interest that I draw here, another area of interest because we have this previous low, and then the market got broken. Look at what happened here. Look at what happened. Look at what happened. Imagine you are sold in this area. Imagine you are sold in this area because of this one. Yes, without having to give you confirmation. Even at that, like you see, you give you the confirmation having to come for a test, right? You can sell in this area. So again, every trade is not going to be profitable. But again, it's better to put yourself in a place where you know that when you're losing not because of your foolishness, but you're losing because of the market condition. So even though you put your entry here, because again, this was the area of interest, and the market is creating a new high, new lows, and a breakdown come for a test. This is valid to me. To me, I will place it sell, but I'll place it sell. But again, the market did not have great to hit. Then it went up, then it came all the way down. Then the market is just doing its thing. So now I just want to go to okay. So remember this is area of interest also. This is area of interest and it's solid, and we have the market rejecting from here downward, right? Then again, we have the market retesting it. So imagine you had entered trade here. You had entered another sale here. What happened? You'll have got taken out. Why? Because you did not wait for the market to complete. You did not wait for it to shift from it actually shifted. No, it actually shifted. But the shifting of it is not really like moving well. So this is it here. This is it actually shift. Yeah, you can actually enter from here. Enter from here, then your stop loss will be above here. Then even though even at all that you get eaten up, it's still also good because again, you're not looking to be your trade to have like 100%. So even when it happened, even look at what happened now. So the market condition happened, right? Then you get taken out. This start happening. Then the following day or the next 3 days, the market broke that particular spot again, come for a test. So now you don't need anybody to tell you because you were selling here before. Now the market is now trading in that particular zone. All you have to do is sell. You don't even need any rocket science here. You just have to sell in this area. So it's just basically simple as that. So this is how you can avoid liquidity. And even though you get trapped in it, it will not be based on your foolishness. It will be based on okay, the market condition is not right. And even though look at what happened, the market was going right. Even if you enter trade here, right, and your stop loss is here. Your stop loss is like 1,000. Yeah, still about 1%, 1 to 1. Yeah, so yeah. And so it's still all good knowing that okay, the trade is still and you get to enter here again and you recover your money back. So again you will have made double. I say double, you will have made 1 to 5 trades here. Even though you put your trade around this area. Around this area. You'll have made double. I say double, you'll have made 1 to 4 or 1 to 5. Yeah, you'll have made 1 to 4. So that is the way liquidity works, and I hope you understand. You can do more practice. So, with that being said, I have my journal and my checklist that I do. That it's gonna it's gonna help you to be able to like move faster because you have to journal your journey. It's not about journaling your journey or your trade. Also, you journal your emotion. You journal your emotion because it helps you to be accountable for every decision you are making, and the checklist helps you to avoid any stupid mistake, because the checklist is like a guideline for how you trade and how you place your trade. So if you want it, the link is down below on this video. You can just click on it, and while you backtesting or you are learning, you can continue to just use the journal and checklist to just be more like a uh, light to share light to your journey. You can always see, and the good things about journaling is that you can always come back to it after like maybe weekend and see okay, what did I do right, what worked this week, what did not work, and what do I need to improve on. So that is why I would recommend that to you. So with that being said, again, don't forget to you can subscribe to our Telegram where you can just be part of the community. You see the latest videos, and if there's any trade I'm looking for, if there's any insight and any things that I learn, I try to put it there so that we can both learn together. With that being said, don't forget to like and follow if you have not followed yet, and peace out.